Is quite storm brewing across New Zealand right now. While the headlines are distracted, a cascade of economic shift is rewriting the rules for Kiwi families, homeowners, and businesses. We aren't just looking at a mild winter slowdown. This is an all-out battle for survival. From falling truck volumes to crashing house prices and soaring interest rates, numbers coming in are sounding the alarm. Something is fundamentally shifting under our feet, and the ripple effect are about to hit every single household in the New Zealand country. To understand how we got here, we have to look at where we were just a few months ago. For the past couple of years, the narrative from the top was simple. Tighten your belts, fight inflation, and the economy will stabilize. We were told that a strong dairy season and a resilient house market would carry us through the worst of a global crunch. But behind closed doors, the pressure has been building. The government has been trying to manage delicate balancing act, deregulating finance, while trying to protect consumers. But they are running out of a runway. Indicators that usually signal a healthy country are flashing red. The wheels of industry aren't turning like they used to, and the safety nets we relied on are beginning to fray. Let's look at the hard evidence. The roads. ANZ's latest truckometer data for May reveals a stark reality. Both light and heavy vehicles traffic volumes have plummeted. Why does that matter? Because of the trucks aren't moving, the economy isn't moving. At the exact same time, manufacturing has hit a wall. Business NZ Performance of Manufacturing Index just recorded its lowest reading in nearly a year. But the pain doesn't stop with industry. It's hitting your wallets directly. Look at the banking. ANZ just broke ranks and quietly raised its fixed mortgage rates while its main rival are holding steady for now. This move creates a massive competitive gap that threatens to squeeze everyday homeowners. Meanwhile, the government is preparing a massive regulatory overhaul. They are planning to shift oversight of consumer credit laws entirely over to the Financial Markets Authority. They claim it's to simplify the rules. But critics worry about what gets lost in the shuffle. Then there's the housing market. It's facing brutal, chilly winter. Auction activity has practically dried up, with fewer than 3,000 properties offered weekly. Think about this. Total housing stock has hit a massive 12-year high for May. There are plenty of homes, but nobody's buying. As a result of asking prices have officially crashed for 3 consecutive months. This brings us to the brewing political warfare. Finance Minister Nicola Willis is digging her heels in a controversial surcharge ban on credit card payments. She wants it pushed through, but support inside the industry is completely fading. Retailers and banks are pushing back hard, calling it unrealistic, but the biggest, most dangerous battleground is hidden in the insurance sector. Natural Hazard Commission has just rushed to secure a massive 20% increase in annual reinsurance cover, bringing it to a staggering $12.3 billion. Why the sudden panic? Because insurance companies are sounding the alarm on high-risk climate zones. Advocates are warning that regular Kiwis are about to get priced out of their own homes due to unaffordable premium spikes. A complete withdrawal of insurance coverage in certain areas, and if you think agriculture will save us, think again. Our rural sector is staring down a massive cost shock. For 2026 and 2027 season, input costs are soaring so fast that analysts warn it will survivally cripple future global food supply flows. So, where does this leave us? The collision course is set for the upcoming GDP release. If the numbers confirm what the trichometer is telling us, we are looking at prolonged economic venture. This regularity changes and price drops aren't hypothetical. They are rolling out over the coming months. The gap between the struggling rural sector, trapped homeowners, and banking decision is widening. The question we have to face is simple. Is this painful slowdown the necessary medicine to finally break inflation, or is it the system breaking the people instead? Will government policies save the Kiwi dream or kill it? I want to know what you are seeing out there. Are you feeling the squeeze? Drop your thoughts below in the comments. Let's talk about it.